Hello, we're back again, and today it's Monday. The market has been severely affected by the news of DeepSeek AI that was introduced by the Chinese on the 20th of January when President Trump was inaugurated. This is a large language model, artificial intelligence, which has disrupted the market. Generally, the financial markets, seriously affecting the tech giants. I mean, as I'm talking to you now, Nvidia's shares have gone down by about 12%. Generally, the crypto is on average around 8%, some at 7%, but around 8%. Let's discuss this because it's one of those things that really have a fundamental impact on our fundamentals. I mean, the price of Bitcoin dropped below 100,000 US dollars today, marking a significant decline as traders reacted to developments in the AI sector and prepared for the US Federal Open Markets Committee, the FOMC, the meeting that will take place later this week. Remember, we said it will be Tuesday, Wednesday. The leading cryptocurrencies fell by 6% from its weekend high of 105,000 US dollar, with the broader crypto market shedding 8% in total market capitalization. The slump comes as investors digest news about China-based DeepSeek disruptive AI advancements, which have raised questions about the sustainability of the US tech valuations. DeepSeek, a China-based AI research firm, unveiled an advanced model that reportedly rivals OpenAI's system at a fraction of the cost. Built with just $6 million US dollars and significantly fewer computational resources, the model challenges the prevailing narrative that high-cost infrastructure is necessary for AI innovation. This revelation has shaken investor confidence in the US stock companies, many of which are heavily reliant on high valuations tied to AI development. US tech-heavy indices, including Nasdaq 100 futures, fell over 2% in response, a decline mirrored in Bitcoin's price action. Traders cashed out positions ahead of the FOMC's two-day policy meeting starting on January 28th. Market participants expect no immediate rate cut, contributing to reduced appetite for risk assets, including cryptocurrencies. DeepSeek's cost-efficient AI model adds pressure to US tech firms, which have received significant investment for AI development. This raises broader concerns about over-evaluations in the tech sector and affects overall market sentiment, spilling over into the crypto market. Futures market data shows that traders lost over $873 million US dollars in liquidations over the past 24 hours, with $265 million US dollars coming from Bitcoin-linked products, according to CoinGlass. The largest liquidation order was valued at about $98 million US dollars, which occurred on HTX, which used to be Huobi, that exchange. The market downturn was not limited to Bitcoin, with major altcoins suffering significant losses. Solana and Dogecoin plunged over 10%, Ethereum, BNB, and ADA fell over 8 to 9%. Smaller tokens like PPAEOS saw losses exceeding 15%. So it's a huge thing in the market, and those who are currently trading know what I'm talking about. They've seen from their positions. This makes sense why I had given that precautionary advice that I do not think it's the right time to take leverage. Yes, there are sentiments of a bull run. There's positivity coming from the Trump administration. We spoke about that sentiment. How sustainable is the sentiment going forward? We think it will be sustainable if the changes really do come in, and those changes have got the desired effect. Now, the changes I'm talking about is the regulatory changes as well as the macro economic fundamentals in the US in terms of the monetary policy, and just the federal stance in terms of how they are handling and dealing with the economy. And some of the ideas, the new decisions that the Trump administration seem to be likely to take, as well as have made overtures in terms of those decisions, they seem to have, if you look at a distance, the ability to create a positive sentiment in the market, including the number of investments that happened before President Trump even got into office and the announcements that were subsequently made. So there is this positivity that we had spoken about that is highly anticipated. But at which point does it come in and it gives us a sustained bullish market? It's not yet. Some of these have got to start playing out in the market for us to see the sustained bull market. Yesterday, we spoke about the fact that the cryptocurrency market is in the early stages of adoption, infancy. However, those early stages of adoption have got the impact that yet the crypto market is not used to. The crypto market is used to being a non-traditional segment of the financial services that operates just outside of the traditional system. But with the exchange-traded funds that now have been approved, and therefore some of the traditional players coming in like BlackRock and others, Grayscale, you name the fund houses that have taken on these EFTs, what it then means is the impact that happens in Wall Street in the traditional sector does have an impact in Bitcoin. Because now the investors in the Bitcoin world are not necessarily those that believed in the technology of blockchain, but there is a limited adoption, which means now the market impact and resonance does affect Bitcoin. So we are affected and we will be affected. It's the success of the adoption of Bitcoin. Imagine when Bitcoin is fully adopted, this will be part and parcel of the significant impacts that you see in this market. So when we look at the positive sentiments that are based on the new administration, the pro-crypto administration of President Trump, the regulation, as well as the presidential advisory councils that has been set up, those are really positive for the crypto industry. And therefore, having post ETF, these are some of the things that will sustain a bull run. And yes, that may be true. I do think that there is a bull run that will come through, at which point I don't know. But there are the basis of what will become a bull run if we look at where the World Economic Forum is today about Bitcoin, what we spoke about in the last episode, what the Davos panel spoke about with regard to Bitcoin, and the openness now from central banks to engage at a regulatory level with the players in the crypto market in order to understand this new form of trading, as well as these new forms of assets that can be written into the mainstream commercial banks and regulated by the central bank. So it's positive that there is this exposure that the crypto market has because it's the beginning or the infant stages of adoption. However, for those who are trading today, it has a significant impact in terms of your positions that you currently have. And hence, again, I'm going back to the advice that I had given, is it's the advanced traders that I would, in my case, think that it's okay for them to take leverage trades. But beginner traders, for now, it would be advisable to take spot trades rather than leverage trades. And as a result, in these retracements that you see, you see the average around 7% Bitcoin, 8% Ethereum. But then once you start to go to other altcoins, we're talking the 15% retracement levels. You can imagine the amount of money that would be lost in those leverages, as had been spoken about. There was a value of over $800 million that was liquidated in this retracement. But you look at the tech sector within the Wall Street, it's heavily affected. Nvidia's share price has gone down by 12%. So are other players around that sector. What it does, though, it's getting up the investors in the US to put pressure on the tech giants like Meta, like Google, like OpenAI, in terms of the evaluation of their capex requirements, that the numbers become properly evaluated numbers that are not inflated, or otherwise then you've got these disruptions that may come from the likes of China and other countries that are advancing in technology. The worst about this disruption, it's not the emergence of a rival technology to OpenAI or a rival large language model to OpenAI's ChatGPT, but it's the fact that it comes in for free as an open source. Imagine if you had put these investments into OpenAI and the expectation. Notwithstanding the fact that over the weekend, while this panic was going through on the Twitterverse, Sam Altman made a tweet or sent a tweet out there, the CEO of OpenAI, and he spoke about the new version of ChatGPT that is coming through. And the expectation is that that version will be advanced from what DeepSeek has been able to put into the market with the R1. So these are the developments that are taking place in the tech industry. And these are huge developments. But if you look at the geopolitical side, these developments are showing the ability or the resilience of the Chinese tech and innovation to still perform exceptionally outstanding feats, irrespective of the sanctions. Because the expectation, Eric Schmidt from Google, at one point made a statement that the advances in technology would far outstrip China because of the impact that China is faced with now and the challenges that it has in its access to the chip, the latest semiconductors. However, he had to re-evaluate his position. And when he was addressing graduate students, he corrected himself looking at what changes have taken place. But I'm using him as an example because it was a public statement. I'm sure there are many other leaders out there that have looked at the evaluation of the tech stock and really thought that the decisions that have been taken by the US government around the issues of sanctions, around the issues of tariffs, really would have a slowing down effect on China's progress. If you looked at the 5G technology that Huawei introduced, again, it was a shocker against the expectation. Look on the 26th of December, during Chairman Mao's birthday, the Chinese government, for the first time, introduced into the world a sixth-generation fighters, which are the first with the J-50 and the J-36. So it's the J-36 and the J-15, the new stealth fighters that China revealed to the world during the 131st celebration of Chairman Mao. So these advances in technology and these disruptions are showing that the tech is not one-sided in terms of where it will come from, maybe the United States or certain countries, but it might come anywhere. And therefore, the valuations for investment into these technologies that are coming through have got to be stripped down to the bone so that the real benefit of value in research and development is what really is evaluated into those fundings. Or otherwise, then we would be sitting with what we have now, with the market shock and the impact of the new disruptive technologies coming through and really shaking the market. This is what I wanted to just share and give context to where the market is at today, because certainly there is panic in the market, and maybe you might be asking yourself, what is the reason for this retracement? How far does it go? It's not the same as the bull trap I was talking about in the previous episode. In the previous episode, in the technical analysis, I was saying Bitcoin is sitting at a bull trap, and the retracement of that bull trap, some who are bearish are saying it might go as low as $70,000 US. This is not related to that yet. However, these are the shocks of the disruptive technology into the financial markets. I hope this makes sense to you. Please follow this. As you can see in my background, this is a dedicated channel that looks at advanced technology and science. However, I wanted to talk about AI and its impact into the trading environment as well as the financial markets. But do expect more videos that will talk about advanced science topics that are not necessarily limited to trading, but they talk about science, advanced, and societal and technologically based points of interest. Anyway, I wish you all the best. I hope this has made sense in terms of just giving you something to put into context what is happening in the market out there. Please be careful in your trades. Make sure that you take positions that you have studied and you are convinced and your conviction rate percentage is higher, or your conviction is higher on those, so that the risk that you are taking is calculated risks. You're not gambling. Trading is not gambling. It's science, and therefore it's important for you to do your analysis before you take trades. And please be careful of the fear of missing out. Take it easy. Don't rush. Don't fall into what is in the social media about unbelievable exorbitant gains that others have made. Because on days like this, the very same gains that people have made, if they're not careful about their fundamentals in trading, both in terms of trading wisely at a fundamental level on market shift, as well as also looking at the technicals in terms of how long do they stay on trades and what actions do they take when the market does retracement, and which positions or which types of trades have they taken, spot trades or they've taken leverage trades. But anyway, like I said, I wish you all the best. I hope this helps. Cheerio. Bye.